People continue to talk about the Dreamer program. We're going to go over another article on it next. Welcome everyone to Real Estate Daily. My name is Troy, and every day we go over the latest news in real estate, the mortgage market, and the housing market. Now, before we jump into it, do me a favor, hit that subscribe button, boom, boom. I want to give you the most current news at the very moment it breaks. And right now, the Dreamer program is still being talked about, even though it's 5 days old. It's been over for 5 days. Now, if you guys are out there looking for a home, and I know a lot of people are in the springtime, there is a manual I have below, a guide I have below. It's called the Buyer's Guide. It is a very good guide on the procedure and process of buying a home, what to look for in an agent, what to look for in a lender, and then the process of escrow, process of looking for a home. Check it out below. Hit the link and then go ahead and put your email address in, and boom, you will get a copy of it. Now, if you're a seller, we have the same exact thing below for you as well. The seller guide is very important for people who are out there trying to sell their home, what to think about, especially first-time sellers, right? It's like, okay, I was on one side and it happened so quickly, but on a sell side, it's very different. And I guarantee you right now that when I go out and show homes out there, I consistently see agents that just don't communicate, don't care about their seller. All they did was list it, and they're just hoping to get an offer on it, and they'll just go from there. It is more important today to have the right agent selling your home than ever before. The last 3 years, any idiot agent can roll out of bed and sell a home. Today, it's a lot more strategic. You have to price it right. It has to be in the proper condition to maximize the amount of money you're going to receive. So with all that being said, let's jump right into it. California approved, and this is from the Orange County Register, California approved $300 million in state-backed home loans. Who got the money? So this is kind of breaking it down, who got the money. Now, as we reported yesterday, the LA Times came out and said that Gavin Newsom stole money from this program, about $200 million or 40% of it, to use for his own little budget plan. Now, it's been kind of a bad taste in a lot of people's mouths, especially when this program came out. There were so many buyers out there that tried to get into this that it just absolutely slowed the machine down to a point where a lot of people were unable to even get approved. Lenders were inundated. This was only around for 11 days. But when lenders are inundated, they can't get back to all their people, and they have to go pick out the people that are actually approved and are motivated. Because I told all my clients, all 3 of my clients, we're buying a home today. There's no other time to buy. Then I had a bunch of clients that said, oh, I'll get approved, and they just didn't give all their income documentation over. And now I'm hearing all weekend long, I heard this crybaby crap about not getting their documents over and getting approved, that they lost out. They thought it was going to last longer. Guys, when the opportunity arises, you have to jump on it. If you're not jumping on it, it doesn't make sense to do it. This was a once in a lifetime thing. I'm hoping it's going to be twice in a lifetime. Now, when I'm looking at this, more importantly, you're sharing the equity in people's homes. So not only are you giving them, 20% as a down payment assistance, but you're also sharing in the equity of the home. And that is a big, big plus for the state of California. They're going to make a ton of money off this. But wouldn't this be smart for hedge funds to do it? If you can fractionalize mortgages and fractionalize ownership, it makes sense. It completely makes sense. And I see that if a hedge fund out there would duplicate this in certain parts of the United States, especially in hot spots such as Southern California or all the state of California, then why not do it? This is how you make money. This is how you make a lot of money. Yeah, you might just put up to 20% and you're holding it, but what is the outcome? You're gonna get your money back. And the only issue that you have is you wanna keep the market hot. How to keep the market hot? Just exactly what happened. Everyone just bought homes. All right, so let's jump to the next one. CNBC, outlook for credit access hits record low while inflation expectations jump. New York Fed says, I've been saying this for a while. We have to figure out this issue. Our government is a train wreck, okay? A train wreck. When we think we have inflation going down, what happens? The Fed then goes ahead and bails out banks and then reopens all, and then starts literally, they don't physically print money. They just poof money out of the air and then start bailing people out, which then in turn, that money gets thrown to the economy, causes more inflation, which are fighting the CPI with inflation. This is the worst case scenario. We need Janet Yellen out. We need the current administration, just needs to be out. It has been a complete train wreck ever since they've gotten in 2 years ago. There is no question. I don't care who's in there. This is not a politically driven conversation. This is for people who know what they're doing, and we're obviously have run into people who have absolutely no idea what they're doing. They just want to throw money at it that they don't even have. Let's go on. Housing Wire, Housing Tracker, mortgage rates dropped almost 1% last week. Big week. I absolutely predicted that. Now, but we're seeing the upswing this week, right? Because now people are fearing that because the Fed printed or injected all this liquidity to save banks, then they turned around and they just caused more inflation. And because of that, the CPI number that's coming out really soon is going to hit hard. And if it does tick up, then they're going to crank down again or raise interest rates. And the world is watching, and the world is done denominating in dollars. They're slowly but surely dumping the dollar. Now, there's over $100 trillion in dollar debt out there, so we're not going to see any issues anytime soon, but we're just going to see inflation continue to seep in from other areas that are happening in the United States, outside the United States, and it just continues to show the dominance of the dollar is not there. It's not going to be there, and somewhere in the future, it could really get hurt, and we could really see inflation go up. So let's go over this. This is interesting here. Right? It says mortgage rates fell last week on a 10-year yield, broke lower for the first time since significant rise in the rates last year. That's a plus. Next, active inventory rose 823 single-family homes, and new listing data is trending to all-time lows. Said that over and over. There's just no homes out there. It doesn't matter. Now, with no homes or very little homes or all-time lows, the numbers can be manipulated, and that's what we're seeing the national media doing. Purchase applications fell 4% weekly, breaking a 4-week streak of positive growth and still down 35% over a year. We're seeing that. Well, here in Southern California, this is nationwide. Here in Southern California, we absolutely saw mortgage applications explode up the last 2 weeks. I mean, literally explode up because of this Dreamer for All program. So that's what's really been helping out this market. We're going to see a strong market here in Southern California. I actually think that the market's going to be stronger outside of the major cities, outside of LA. Who the heck wants to live in Los Angeles? That's definitely one big issue that's happening right now, is that real estate in areas that are not conducive for, high crime as well as high homelessness. They're just not desirable for people. They don't want to be there. In LA, the city of LA and some of the surrounding areas has been a complete nightmare. All right, and last but not least, let's go over the rates. Wow, what a big jump yesterday. 15 basis points for 30-year conforming. 30-year FHA went up 10 basis points. The jumbo actually kind of settled down, and actually for the first time in months and months is lower than FHA. Wow, check that out. That's crazy. And it's significantly lower than 30-year conforming. This is kind of a crazy because the majority of people in our area are either taking advantage of FHA or jumbo rates. So, well, guys, thank you very much for joining me. If you have any comments, please leave them below. If you actually need any questions answered, I'm more than happy to answer them in the comments as well. Otherwise, you can contact us. We're more than happy to give you any advice that we have. Between me and my business partner, we have 36-ish years of real estate. We've sold way over 1,000 homes. We've, just like that Allstate commercial, if you've been around long enough, you've seen everything that's going on. So you're not surprised by anything out there. Guys, you have a good day, and I will see you tomorrow.